As you heard just there, almost 2 weeks since the beginning of US-Israeli strikes on Iran, global markets are very jittery indeed. Let's crunch the numbers with Jameel Ahmad. Jameel, oil prices seem to be stabilising around $100 a barrel for now. What exactly is going on?
Well, this market actually is still very sentiment driven. And when you consider that the oil price particular has ranged from $115 this week to as low as $80 this week, I can't say that we really have any stability. We might be hoping for some temporary stabilization around some prices. But again, headlines can change any minute. Should we have any positive headlines that hopefully this very unfortunate episode will come to a conclusion, then the oil prices can very suddenly slump. Should we have more headlines suggesting that actually there's going to be an extensive supply shock to when it comes to oil and being able to get oil to the market, then I think that commodity can still go back up. And overall, you've got an asset that's up 50% this month. And the market is still very optimistic that this is going to be a temporary episode rather than something more extensive. But again, we're heading towards our third week now in just a couple of days. And I would say the market is still not pricing in enough risk, specifically with other asset classes. Global markets, Wall Street and so forth, have not moved enough considering what's happened in the region. And even other asset classes, safe havens like gold, haven't really budged that much. But what has been a particular interesting trend is that we're continuing to see safe haven flows towards the US dollar, which does suggest that investors on some side are thinking that this might last a little bit longer than what was hoped.
And Jameel, did that plan to release strategic crude reserves from major economies have the intended effect?
I would say no, because these strategic reserves are there for a very, very, I'd say, sudden situation. And of course, that suggests to the market that certain commodity importers are somewhat panicking. And you also have to consider that these reserves, they're not infinite, they're finite. There is a limit to them. They do not change how much production is going to be supplied to the market, or can they change what supply the market might actually need. So as soon as these reserves start to get a little bit depleted, we're going to see some more panic in the market again. And potentially these reserves got, I would say, given out to the market too fast based on what happened in the market with oil last Friday and that spectacular surge in oil price on Monday morning. I think the market was reacting to this rather than actually what is happening in the atmosphere.
And the energy crisis is, of course, stoking inflationary fears. US and UK central banks holding interest rate meetings next week.
Yeah, and the global economic outlook has very much been tipped on its head over the past 2 weeks. And I think for 2026, there was a lot of optimism that the likes of the US Federal Reserve and the UK Bank of England would be looking to cut interest rates further over 2026. But we all remember that we had a generational inflation shock when it came to the Russia-Ukraine crisis of 4 years ago. And this situation in the region can potentially have a far more worse impact should it be prolonged. At the moment, optimists are still hoping that this will not last too long, but the risks are there. And that's why I think for interest rates and inflation expectations this year, we have to revise those completely. Inflation expectations are going to go back up. And I think that anybody that's hoping for interest rate cuts is going to be led disappointed, especially if this conflict is prolonged.
Jameel Ahmad, Chief Analyst at GTC, thank you very much for speaking to us here on France 24 today.